Thank you, Michelle and Carly, and thanks to Pivotal and Startup Grind for having us here tonight. Mark and I have had the joy, I think, of doing this a couple times before, and it's a story that I know I can talk about for hours and hours, since I am also a big Strava user and have been virtually from the beginning. Let us start with some quick intros and maybe a little bit of our background. I was an entrepreneur back in the 90s. I started 3 different companies prior to getting into the venture business. And the last company I started was actually bought by Mark and Mark's company. So, not Strava, long pre-Strava. And after that, I got into the venture business, started doing a lot of investing. When these guys started Strava, because of our connection, I knew about it from day one. Jackson Square Ventures, to tell you a little bit about us, we are early stage venture investors, typically investing in Series A. We don't do seed investing, and we do very few deals each year per partner. We do 1 deal per year per partner generally, and we end up working with those companies for 5, 10, 15 years before we ultimately see exits. And in the case of Strava, so we have more time. Exactly, you have more time. In the case of Strava, I think Strava is representative of the types of companies that we invest in that the founders are people that we knew for a long time. You know, the reason we only do 1 deal a year is because I only have so many friends. So, a little bit of your background.
Great. Yeah, guys. So my background is pretty short and simple. Grew up in Reno, Nevada. Runner, skier, that's what kind of got me into thinking about outdoors and being active as long as I can remember. Ended up in Silicon Valley back in 1991, so I am a dinosaur. 25 years in this valley. Started, ironically, opposite of him. So I started working for a venture firm when I moved here in 91. Did that for about 5 years and learned that I really wanted to be on the other side of the fence. So launched a company in 95, 96 called Kana. It was supposed to be Kana Sports. We actually still have the business plan from 1995 that became Strava. But at the time, we couldn't actually figure out a business there, and so that morphed into an enterprise software company that we were fortunate enough to build through the late 90s and early 2000s. That was when I had the good fortune of meeting Greg. We acquired his company, Connectify, back in 99, summer of 99, right before we went public, actually. So great run, great taste of what it was to be an entrepreneur. And you fast forward, I'm missing a key component here, which is my partner in this whole thing, Michael Horvath. You'll hear me refer to him a lot tonight. He's been a best friend for 25 years as well. We met on the crew team, both rowing at Harvard. And he helped me found Kana. And then you fast forward to Strava back in 2007, 2008. Both of us were pretty bored, to be honest with you, and knew that we needed to roll up our sleeves and do something else. And we pulled out that old plan from 1995 and said, could we launch a business that builds digital products and services for athletes? That was really the fundamental thesis. So I'll fast forward just a quick facts about Strava for those of you who might not know what we are, what we do, and then we can get into questions. Strava is now a 7-year-old business. We're headquartered here in San Francisco. There's about 125 people on the team. We've got 3 offices, San Francisco, Hanover, New Hampshire, which is where Michael actually is. And he's got a team of about 10. And then we have an office in the UK. And we'll get into it tonight, but it's pretty simple. We're here to serve the world's athletes.
So before I start with your questions, I guess a question for everybody else. How many people here actually are Strava members and use Strava? Okay, so a good number of you. That's good. So when you raise your Series A, sort of fast forward a year plus into the business, 2 years into the business, Strava had, now get this, 5,000 registered members. Yet you managed to raise several $1 million from some unsuspecting investor. With 5,000 registered members, that's tiny. Can you talk about the vision then that you had for the company and sort of how that vision has evolved over the years as you've grown?
Yeah. So Greg is right. We only had 5,000 when we decided to bring in outside capital. What he's not even fully acknowledging is that we've been in business really for 2 years prior to that. So it took us 2 years even to get that first 5,000. And we self-funded that, and we're doing a lot of experimenting around what sort of the product should look like and feel like and what was of real value. What we learned in the fall of 2010 with 5,000 athletes were two really important things. One was we had this focus and this thesis that if we could build digital products and services for athletes, they would pay us for it. Like, let's make something that is of high value that they'll actually want to pay us. And so the original product was very binary. You could use Strava for free up to 5 times a month, and then you had to pay us. And what we saw quickly was ridiculous conversion rates. So we had the kind of conversion that allowed for a really interesting business. The other thing that we were seeing, despite the 2 years to get to 5,000, was with zero marketing, there was a really interesting viral network effect within the athletic community. One caveat we'll get into in a second, but we were very focused on one core audience, which was cyclists at the time. That was a strategy, not a vision. So our vision was always, can we build for the world's athletes? Can we build a trusted brand? And then our strategy was, let's go deep with one audience. But that's what's happened in the last 7 years. Just, we've kind of ridden a bunch of waves. We've ridden this wave from being a GPS-based device on a website. Basically, you had to use a third-party device to even get your data onto Strava. We were just a website. Everybody thinks of us as a mobile app. That's not how we started. In fact, our mobile app came almost 3 years later. That is the next chapter. When we brought mobile to life in 2011, changed the game, particularly when it came to growth. We became a social product that we hadn't fully anticipated. We're still working on that, but if you think about just the way in which we serve athletes today, through our apps, through all of our various platforms, there's a huge component of this, which is how we connect the world's athletes together and how they sort of interact with each other. We became global very quickly. About 78% of our membership today is outside the United States. So we had to figure out just exactly how to do that. I get grief a lot from my early investor around how slow we were to just frankly localize and support all of our international brethren out there. But that's been there. And then I think the last thing we've really been fascinated by is, turns out that there's this amazing community that supports athletes worldwide. The other businesses and products and services that are in the business of really making athletes successful, and they're finding their way onto Strava. So as we sort of think about what's possible, what's really fun is that it's both a blessing and a curse, but the opportunities just keep getting greater and greater.
So Strava has an incredibly passionate user base, member base. Have you done anything explicit to drive or fuel that passion, or has it just sort of developed in that way?
I think there's two things. I think the first was we've tried to be authentic. It's one of the core values of Strava. We call them the Strava ABCs. In fact, it's funny, I get a lot of grief from our team because they know there's actually a hashtag. I won't try to dig it out. It's called hashtag carry the coin. I'll show you tonight if you want to see it later, but there's literally a silver coin we carry. It's got the ABCs of Strava, and the first one is the A of ABCs. Let's be authentic. And so when we think about authenticity, we think about, wait a second, maniacal focus on the needs of the athlete, and we went deep. So the second thing I'd say is we went deep with one audience. We said, let's go after the cycling community, not because we think that's the only market. In fact, we were often criticized. There were a lot of guys who wouldn't invest in Strava, and the thesis was, it's too small a market opportunity. You'll never actually grow. What we felt they were missing was, if we can get that group right, we can roll this page out across different verticals. And so I'd say that that's the second thing that we've been able to do, is really think about just keep the experience very focused on the athlete. You don't see a bunch of ads swirling around inside Strava today. You don't see experiences that in any way try to take away from what you're trying to accomplish. Doesn't mean we're not going to figure out how to insert them, but we want them to be there in service to the athlete, not the other way around.
We've had a lot of competitors historically, but not just the historical competitors that we've had and where they all have gone, because there are very few independents now, but also the ecosystem that we play in, and the ecosystem includes the platform vendors. You mentioned Garmin earlier, et cetera.
Yeah, so what Greg's alluding to, on the competitive landscape, what's been really interesting, if you think about the independent players that have been in kind of the fitness tracking space and so forth and the other apps, in the last 18 months, everybody's been acquired. It's been fascinating to watch. Under Armour came through and made a handful of acquisitions, spent almost $1 billion on different acquisitions between MapMyFitness and Endomondo and MyFitnessPal, and that was followed up by ASICS acquiring Runkeeper, and I mean, the list has gone on. Adidas bought a big company out of Germany called Runtastic. Exactly. So we've seen a lot of consolidation. what's interesting about that is that our major competitors today that are directly sort of in our space, they're all now owned by footwear and apparel manufacturers, which, good news and bad news. I mean, the bad news, these are big companies, well-funded and well-known global brands. Why is that a good news? And I can speak to you guys all as entrepreneurs. That's a beautiful kind of competitor, because this is a competitor, A, whose business model is fundamentally different. They are trying to sell more footwear and apparel. So when you talk to them, and again, I've sat down with the CEOs, their mission in life is to use their digital properties as a means to an end, as a channel for distribution. It's not in service to the athlete. And secondly, they just simply have a higher priority problem every quarter. These are all large, publicly traded companies that need to make billions. And third, what's really fascinating is those same companies that have been the acquirers, are now talking to us about how they can play on our platform. But it turns out that we have tons of Nike athletes and Under Armour athletes and Adidas athletes on Strava. So it ends up not being an either or. It's, yeah, you've got your digital property. How do you create a presence on Strava that makes sense? So that group we felt really good about. The platform guys that you mentioned, Apple, Google, and so forth, they've been huge partners for us and continue. I mean, just the announcements from Apple here over the last month and a half, their new watch, they've clearly gone with fitness, which is perfect because we build the apps for that device. Google with their Google Fit. Someone was just telling me the other day, if you can believe this, we had over 100 uploads just last month from Google Glass. Anybody remember Google Glass? There's people still using it for Strava to upload activities. So those guys we found have been just great partners for us, and that they're seeding the planet. They're helping everybody understand the value of fitness and health. My concern is really twofold on competition. I'm worried that there's frankly somebody in this audience right now who's got a startup that I don't know about that's gonna rob us of opportunity. So that's who I'm mindful of. Where's the startup that I just don't know about? And I think the other way that it's funny, we were just talking about this today inside Strava. The way that we have to kind of rethink the competition in Strava. In fact, quick side note. We had a Facebook executive a couple days ago, and he said, there's 3 reasons that people even open an app. There's a task they're trying to do, there's a notification they got, or they're bored. That's it. You're going to open your app for one of those 3 reasons. And I thought it was that's how I behave on my own phone and so forth. When you think about that, part of what Strava has to be very cognizant of is we're competing for that same time. There's only so many minutes in the day that you guys are going to spend time in app. We want you to use us for all your tracking and what you're going to do, but more and more, we're going to have value in the experience that we want you to be able to use when you're not running or riding or cycling or kiteboarding or whatever it is you do. And so how do we compete with that noise that's on your phone or other places? So thinking a lot about sort of the value proposition, making sure that we are there to motivate and inspire. If we do that, good things happen, but it's tough. There's a lot of noise on everybody's phone.